Hello and welcome everyone. It gives me great pleasure to have you on board with us today for our Innovation in Mining webinar. My name is Ali Okani and I drive the ESG investment division at Peak Asset Management. With us today on the panel is Matthew Waterhouse, Chief Executive Officer, 3D Metal Forge, ASX 3MF, Brett Giroud, Chief Executive Officer, Orexplore Technologies, ASX OXT, Steve Norgard, Managing Director, ASX WIN VG Nickel, and Johan Lambrechts, Vice President, Ascari Metals, ASX AS2. For those who are returning and for those who are new, we will be going through some questions today, as well as learning a bit about the businesses and hopefully identifying some key trends that are shaping the mining landscape and the small cap explorer on the ASX today. A bit about Peak Asset Management. We're a Melbourne-based boutique investment management company. We run a co-investment model. Essentially, every deal that you see from our end is backed with our own capital, and our business is about finding curated deal flows from around the world, co-investing alongside our network of investors and giving you the hand-selected opportunities. If you'd like to find out more, please feel free to write into us. So before we get into the companies, a bit more about battery metals and the mining landscape. Chances are that if you're a small cap investor, you've got exposure either to a lithium stock or a graphite stock or a nickel stock. And as we've seen over the last 2 years, the landscape has changed dramatically. With the ever-growing demand in the EV space and the battery metal space, we've seen prices of lithium carbonate, prices of nickel rise dramatically over the last 2 years in particular. And the outlook going into 2025 and 2030 with the UN SDGs and decarbonization goals doesn't look like it's slowing down. So on that note, I'd like to essentially kick off and invite our first speaker. Matthew, welcome to the panel. Could you tell us a bit about 3D Metal Forge and what the company is doing?
Yeah, thanks, Ali. Thanks for having me here this morning. Morning, everyone. We're an additive manufacturer, and some people call it 3D printing, but additive manufacturing is the industrial side of that. And we offer a range of services to help companies take advantage of the benefits of additive manufacturing. Sometimes that's making a finished part for them. Sometimes it's helping them redesign parts, or sometimes it's training and helping them take advantage of the technology. Most of the parts we make are metal, and they're for end use, so they go straight into use for clients rather than prototypes. And we focus on Australia, Singapore, and the US. We've got facilities just opened in Houston, Texas. We've certainly seen over the last couple of years the challenges that the energy sector, in particular in mining, is facing. Supply chain disruption, pressure for increased sustainability, delays, soaring freight costs. And it's something that we've been helping a lot of companies with over the last couple of years. So we've been able to print parts that are urgently needed that companies haven't been able to get because supply chains have been tight or delivery timeframes have been long. So we've seen a lot of companies asking us to help them print urgently needed parts to keep refineries or ships working. We've also seen a lot of interest in the sustainability angle for additive manufacturing. So when we produce parts, we typically use significantly less material because we're building a part up layer by layer rather than chipping away at a block. And when you're dealing with expensive materials that are increasingly hard to get, that's a big advantage. We also are able to use sort of remanufacturing technologies that use less energy. And one of the things that we're really embarking on with clients is being able to print parts at the point of use. So we have a facility within the Port of Singapore that we built together with PSA, the port operator, that we're able to print parts inside the port, which means that they no longer need to be shipped all the way around the world. So in these days of challenged supply chains, that's becoming increasingly important.
Excellent. Thanks, Matthew. Let's talk a bit about supply chains, because I think you've touched upon a really interesting point there. Can you give us maybe a bit of an idea just in terms of what sort of addressable market you're looking at, especially given the recent supply chain shocks that have been caused by COVID?
Sure. So the sectors we focus on, energy, resources, oil and gas, maritime, defence, and increasingly with our opening up in Australia in the mining sector. And a lot of those companies are facing extreme pressure of getting parts moved away around the world, whether that's for a new plant that's been commissioned or a refinery that's been that's been under repair or a ship that needs an urgent part, typically these parts will move many times around the world from manufacturers to wholesalers to distributors and then finally into the end user. And these supply chains have been really pushed out for these industries. And I think the last few years have found them to be very fragile. So the benefit of being able to produce parts where they're needed is, firstly, you can cut down that delivery time frame. So we've done parts for example, an impeller for a shipping line that would typically take 8 to 10 weeks to produce. We were able to produce it in 2 weeks, which has got a tremendous benefit for downtime and turnaround of equipment. We're also, as I said, with the PSA facility, we're able to print parts in the port when they're needed. And this is a technology that we think has got a big application in the mining and resources sector, which face an even more complicated supply chain. And being able to print parts at the mine site will have a tremendous advantage in uptime of equipment. And additive has also got tremendous benefits in able to produce parts that can work better and last longer. So both of those benefits combined make it a very good technology for energy and resources to look at.
Excellent. I guess a question that everybody has when it comes to 3D printed products is durability. So I guess the question is, how durable are the products that you're currently manufacturing, and how do you see this progressing over the next 5 to 10 years?
Sure. So it is a good question. We do get asked it. So what we have is that an additively printed part is typically far superior to a cast part. We lay down what's called a more uniform microstructure that's regular, that's being laser built rather than poured and cooled. We also find that with the ability to redesign a part, we're able to make that part stronger and more durable. So when under test conditions, the parts are performing extremely well. I'm also pleased to say that we've had parts on equipment for long enough that we're now in a position that we're able to take them off, have a look at them, see how they're wearing, and then update people. So we've 2 examples. We had parts on a ConocoPhillips tanker that were installed in February that were recently taken off the tanker and seemed to be in excellent condition. So everyone was very pleased with those. And we've also had parts in one of the shipyards in Singapore, Semport Marine, where those parts were they were taken off after about a year, and again were in excellent condition. So that, combined with the way that we know that the technology produces the part, gives us a great deal of confidence that these are more durable, last a longer parts. And I think just adding to that, when we get a chance, as I said, to sort of redesign the parts, we're able to upgrade the materials and use materials sometimes that's been designed specifically for additive manufacturing. And we're able to make the parts more durable, including things like resurfacing them so that they last longer. So I think it's very good news on the durability of additive parts.
It's excellent. Matthew, obviously the United States is a big market for the company. I guess the question is, what trends are you seeing in the US, and do you expect these trends to be replicated across Australia?
Yeah, so I think it's been very interesting for us opening up in the US for a few reasons, and applications, as you say, back to Singapore and Australia. First off, I think is around standards. So standards is a really important part of advancing additive manufacturing. I think going back a few years when there wasn't as many standards developed and in use, it was more difficult for companies, particularly smaller companies, to adopt additive manufacturing or 3D printed part because they didn't know what to expect from that part. They didn't know how to hold the supplier to account. And I think that's changing. And a lot of the standards bodies are European and North American.
The final question that we had come in was, what's the next frontier for 3D Metal Forge beyond mining equipment? Is it potentially batteries? Is it expanding into other verticals? What does the future look like?
Yeah, so I think things like batteries are certainly an application that 3D printing has got benefits for, and there's been some recent advances in technology. Batteries are not an area that we look at. We tend to be more metals, and our technology is being designed for larger format parts. But there's an awful lot of parts within the green technology space that are very good for us. So we're actively exploring new parts within the green technology space, as well as the traditional parts that we do, like valve parts and anti-corrosion parts and pump parts, etc. And some of those, I think, back to your question before, Ali, about adoption within the US, we've seen in the US, we've been able to put parts in turbines and engines that have got fairly high performance requirements. So getting those in there, together with the standards that are being developed in the US, like the American Petroleum Institute, gives us a very good exposure to high-performing parts that we're able to then make sure we bring back to our Singapore and our Australian operations.
Excellent. Thanks for that, Matthew. Very informative. With that, I'd like to introduce our next panelist today, Brett Jerd from Explore Technologies. Brett, welcome to the panel.
Thank you very much, Ali. Thank you for having me here.
Can you give us a bit of an idea around OXT, given the recent listing, what the business does, and some of the core competencies?
Sure, thanks for the question. So, Explore Technologies, we were born in Stockholm back in 2010, and we've developed an excellent technology platform built around our GeoCore X10 field unit and insight software. We're seeking to scan drilled core and convert that into insights for our clients to use across the mining value chain. So we have an office in Stockholm with our R&D and manufacturing capability and our fleet of GX10 units, and a delivery-focused office here in Perth as well. The company's just been through the demerger from SWIC and listing recently, last week. It's been obviously a tough period for the ASX, but we're very focused on delivery and excited to be our own company. Part of that demerger, we went through a priority offer as well, which was very well received, great uptake there. So we're very happy with that. We're fully funded and ready to go and focused on the commercialization of the company.
Excellent. I mean, as you rightly pointed out, Brett, it's been a volatile few weeks on the ASX, but that being said, it's really exciting to see innovative mining companies coming onto the boards. Before we get into questions, can you give us a bit of an insight into the demerger with SWIC and what sort of aspects of the business is OXT looking to focus on going forward?
Yeah, sure. Thanks, Ali. So the demerger, obviously that commenced last year and completed late last year. And through an in-specie distribution, we now have a shareholder base in the company in OXT and listing. There was the seed amount sent across there with 12 million as part of that transaction, the additional priority offer funding that came through as well. So the company's well positioned. We're building a delivery-focused operational team here in Perth. So recent hires such as Dr. Diane Valente, seasoned sort of site delivery professional, Thomas Drage, our new engineering manager, and of course myself, recently new as of May last year into the business. So it's exciting to be able to build a delivery-focused set of professionals that have done this before with technology in the field and leverage the amazing R&D work that's been done out of Stockholm since 2010 and on. Focus at the moment for the business is very much on market traction and commercialization and actually creating a set of value propositions for our customers. So I have previously seen what I call tech push by some companies trying to get into the mining industry, where they'll knock on the door of a big miner and say, you must take my box. It spits out all kinds of amazing data, but our focus is actually creating value for our customers and clients on site. So we need to be able to move the needle for them and have conversations one day with an operational team who might be looking for sampling optimization, and then the next day a greenfields exploration team, for instance, that's looking for decision support, which is a unique attribute, we think, of our technology solution in terms of drill core presentation through the GeoCore X10 and getting the right information at the right time to the right people to make better decisions. So we're seeing a lot of interest and a lot of uptake there as we continue to develop our value propositions across the entire mining value chain, from exploration through to emerging use cases around ESG enclosure as well with our consultants, particularly our geological consulting team, where they meet the geos on the mining side. So it's an exciting time.
Brad, I think you touched upon a really good point there with on-site delivery of services. I guess anybody who's worked in the mining industry and with geos knows that there is a real backlog at the labs. So I guess the question then becomes, do you think OXT's technology will eventually go on to replace labs and the need for testing in labs altogether?
The business is not focused on disrupting or displacing labs. The value propositions out of our technology platform are far more broad across the mining value chain. And we're very focused on decision support for geologists on site, but also decision support for people that need to make decisions in the corporate head office. So to ground that in some real world examples, for instance, we're looking for our technology platform to help geologists, be it greenfields or brownfields, and give them sufficient information very, very rapidly to make better decisions in exploration. So rather than the 100% or 95% accurate single assay gold grade that might be done in 3 to 6 days if you're lucky enough to have a lab on site, or the bad delays a lot of people are witnessing at the moment if you need to go for off-site laboratories, we're supplementing that stream really with additional information. So we can scan through the core with our, in essence, hospital CT scanner that cuts straight through it. And we can give them new information such as lithology, structure, detected elements, and other emerging value propositions out of that drill core. And importantly, we can do it as soon as the core is presented to the machine. So there is some conversation in the industry around, analysis and results being able to be done very, very quickly, which is great. We think we're also unique in terms of as soon as that core comes off the rig and is presented to our machine, we can actually provide insight from that drill core to the geologists within a matter of hours. So the machine can actually scan a metre of core within 15 minutes down to 12 or 13. And literally as soon as the core arrives at the machine, you can actually remotely anywhere in the world be looking at that insight platform. So really focused on moving the dial on decision speed, as an example for exploration geologists. In the middle of the mining value chain, another example just to help further ground it might be an operational use case where people are struggling with high volumes of testing and assaying and other things that are needed. And we're really getting in there and challenging what information is actually required and what about the speed element. What if you had in 8 hours time or 4 hours time, information wise, would be sufficient to make a higher quality, much faster decision? In many instances, obviously, assay and long lead assay is what's needed for operational companies to make decisions. But there are a whole lot of other use cases we're discovering in conversations with clients where a different set of information is needed very rapidly to move the dial on decision-making speed and quality. So it's right information to the right person at the right time, depending on the problem or the opportunity they've got. Further to the right in the mining value chain, when you start to look at ESG enclosure and environmental monitoring, there's some really interesting things that we're starting to look at around degradation of elements and minerals that can be extracted from some core to deliver some insight there around environmental monitoring and planning and things like that. So that's an emerging area of interest. As the rest of the panel will get through, we're seeing and communicate, I think, we're seeing a real uptick in not only ESG planning and discussion across the miners, but actually moving to implementing it into their business. And they're very, very keen to talk to companies that strategically understand how you embed ESG across your global organization and how technology can actually enable that and move the dial for ESG and sustainability.
Excellent. That's a really good overview there, Brett. So I guess the potential investors listening to you right now, could you maybe give us just a deeper understanding of the addressable market, given that you're able to work within the market on so many levels? If we were to look, and it's hard to ascertain an exact dollar amount to it, but could you maybe give investors a bit of an idea just in terms of the variety of applications that OXT has?
Sure. So the drill core market, I think, is 107.8 million meters for 22. It has a healthy, steady compound annual growth rate. And our technology is looking to apply itself within that existing healthy market, which is a fantastic global opportunity. We're focused on base metals and precious metals. As I mentioned, and as sort of outlined further in some of the diagrams in our recent prospectus, the value propositions for our technology, we think, are grounded in our drill to insight time. And as a decision support business, we believe we're able to add value across the mining value chain, from exploration through to closure. So very much at the moment, the focus is on our consulting geology group that's growing with some excellent, well-known industry professionals. And they're working hard with our R&D and manufacturing base in Stockholm and our engineering department to actually fit the capability of the technology platform to our customer use cases. So that value proposition and market traction work is the focus of the business at the moment through our dual laboratories in Stockholm and Perth, and site works with emerging customers as well. So it's an exciting time as we get the technology platform out there and commercialise.
Excellent. Thank you very much, Brett. Definitely sounds like exciting 2022 ahead for the company. Latest listing on the board, stock code OXT. Please join us in welcoming our next panelist, Steve Norgard of WG Nickel. Before we go ahead and ask Steve about the business, obviously we must note that nickel prices have been going through the roof recently. So Steve, we might ask you a few questions around that, but before we do, please tell us a bit more about the business.
Sure. Thank you very much, Ali. Thank you very much, listeners. WG Nickel was born out of Neo Metals back in September of last year, a new entrant on the ASX. We are a well-funded junior explorer with a substantial nickel resource base and a focus looking forward with an aim of being production ready by the end of 2023. Our tenement package is known as Mount Edwards. It's halfway between Norseman and Coolgardie in the Eastern Goldfields region of Western Australia, on a regional significant feature known as the Widgie-Mulford Dome. We're in a great location, right beside a major arterial road that goes from Western Australia to the eastern states. We're located very, very close to existing processing infrastructure. And our tenement portfolio, importantly, has already got an established resource base of in excess of 160,000 tonnes of contained nickel. Our project area has a long and esteemed history. The area was first explored in the days of the nickel boom in the mid-1960s, and it's seen historical production totaling in excess of 30,000 tonnes of nickel from 4 separate deposits, of which each of those deposits does have remaining nickel resources that are capable and are planned for exploitation. We've got a lot of latent value, I believe, in our project. Whilst it's been historically mined for nickel, the byproduct endowment is one that's not really fully understood. We know that we've got the presence of PGMs, we know that we've got copper in significant volumes, and we know that we've got cobalt, but we haven't quantified that. And as part of our work program over the forthcoming 18 months, where we're putting a significant investment in infill and extensional drilling, along with greenfields exploration, we hope that we can quantify that endowment in byproduct value, and hopefully gain some value for that in terms of how we go forward with our production.
Excellent. Thanks for that, Steve. We've all seen the price of nickel rise steadily since 2020. I guess the question I have is, do you think that this rise is largely because of the increasing demand of electric vehicles? Or do you think there are other factors at play here, for example, other verticals like steel?
Stainless steel probably accounts for over 70% of nickel use worldwide, and that in itself is growing in terms of demand. But the real growth area for nickel consumption is in batteries. You should note that each Tesla that you see driving around on the road has somewhere between 35 and 45 kilos of nickel in it. And when you multiply that by the rapid escalation in the amount of electric vehicles that you see on the road today and the projected growth in electric vehicles, there needs to be a lot more nickel mined now to be able to satisfy that overall demand. The growth in electric vehicles is forecast for the next 15 years to grow 20% year on year compounded. It's a huge area of growth. And for Widgie nickel, it's very, very important to note that the primary feedstock for that batteries is nickel sulfate, and it's very, very important that low carbon nickel is sourced for that. Otherwise, the concept of low carbon economy hasn't any basis. Very, very important that nickel sulfide as a feedstock for batteries is the preferred feedstock, as in opposition to nickel laterite, which has a huge energy requirement to be able to make nickel. So I see the next 10 to 15 years as being a very, very good time for anyone in the nickel space. But Ali, it is probably worth noting that whilst the nickel price is good now, and it is very healthy and sitting at between 20 and 25,000 US a tonne is a good price. The nickel price spiked back in 2005, 2006 to over $50,000 US a tonne. So whilst lithium and many other commodities are trading at all-time highs, the nickel price is still quite respectable and still has potential to go a lot higher.
Excellent. Thanks for that, Steve. Let's talk a bit about the Mount Edwards project now. We understand that it is a previously producing mine. Is Vigi taking a different approach to its operation to the mine? And is it sort of using any particular technologies that are making it more sustainable?
It's early days for Widgie. The first goal for us is to expand our resource base and get it to a higher level of confidence by infill drilling. We are using all of the available technologies in order to be able to advance that. The real opportunity in terms of new technologies going forward probably come from a pure exploration viewpoint. Our tenement package has had a lot of historical exploration, but upon review of that, we've found that many of the geophysical techniques that have been used, which were applied back in the mid-1970s, are either redundant or there's improved technology that we can apply. So looking forward, we'll be reviewing all of that data, and where the opportunity arises, we hopefully can be a lot more targeted. We've got probably 45 greenfields targets outside of the 11 known resources that we've got. So we've got an abundance of opportunity. It's purely an investment in time and energy. The real opportunity for us from a technological viewpoint is when we make that transition from a explorer into mining, and the mining space is alive and well with new technologies. From the point of view of power generation, we see many new projects in Western Australia and all over the world having a much larger renewable component. And I'd like to think that we have batteries installed and are harnessing the sun and the wind at Widgie in years to come. From an operational perspective, the digitalisation of mining is profound, and autonomy is playing an increasing role at the expense of labour. So I foresee that some of our mines will have got the capability of being fully electric, and indeed that'll be a stretch target for us as we move forward.
Excellent. Now, I know you touched upon the fact that there are other base metals at Mount Edwards as well. The question that we've got is, Steve, where do you see the place of these base metals given the EV battery revolution, and what sort of focal point do they hold for Vigi going forward?
First and foremost, Ali, they represent a potential source of additional revenue, which is all important for every miner. You want to get full value out of whatever you mine. So we've obviously got to define the cobalt, the copper and the PGMs to understand the real value that it represents to the project. If it reaches a substantial amount, then our ability and our processing will probably guide us to ensure that we extract as much of that value as we possibly can. We're very, very fortunate that we've got a potential partner in BHP with their Kambalda nickel concentrator as a partner, and indeed, BHP recover a lot of those byproducts as part of their processing stream. So we'll be working with them as a first port of call to ensure that we get full value and the viability of the project is underpinned.
Excellent. Thanks for that, Steve. Extremely insightful. Please join me in welcoming our next panelist for today, Johan Lambrechts from Ascari Metals, stock code AS2. Johan, welcome to the panel.
Thanks for having me, Ali.
Can you give us a bit of insight into Ascari Metals and what the company does?
Well, Ascari is a junior explorer, and in the gold and battery metal space, we floated in July 2021. Most of our projects are in WA. We've got one in New South Wales and have recently moved into the Northern Territory as well. We floated originally as I said, gold and copper, but copper being driven by it being a very important decarbonisation or green energy metal. All electricity in a Tesla charger or your house flows through copper, and therefore we see the value in that commodity. But recently we've also sort of followed the logical path, already being in the battery space, to add lithium to our portfolio. We are a well-funded exploration company, and we're an active explorer. Boots on the ground is sort of the only way any explorer, I believe, can conduct their business. And at the end of the day, the driver is to add value to the company and to our explorers, but most certainly also to the projects. If there is something to be found, then I'd like us to find it, not the guys that have it after us.
Excellent. Thanks, Johan. Let's talk a bit about the company's pivot into lithium. So what was the reason behind this shift, and why do you sort of see lithium as a growing part of the portfolio?
Well, just looking at the price, the answer is straightforward from that perspective. It is certainly a very, it's a good commodity to be in at this point. But we believe that with the world traveling towards decarbonisation, towards electric vehicles on every corner, etc., the need for all battery minerals, lithium, nickel, all of those would only increase. They would only grow. And with a long-term view, we've decided that it would be advantageous to grow or to step into that world sooner rather than later, especially considering that as it happens in every boom on every continent, from an exploration perspective, the ground in a particular space becomes almost impossible to get after a few months worth of that commodity riding the wave, because everybody pegs every bit of space that's available, and therefore getting involved quicker is certainly more prudent for an exploration company. And we've got involved now. It will remain, or it will be, a focus for us in the next few months and years. We are nimble enough to realize that although we're an explorer and therefore rocks are very important to us, we also need to keep a very firm eye on the markets themselves. And that is beneficial to the company, to our projects, but also our shareholders. So as the markets adjust, as they will surely, we will make sure we adjust accordingly and maintain focus in the correct areas.
That's great. Let's talk a bit about the recent material acquisition that the company's announced. So the company was recently in a hold for replacement and acquisition. Can you tell us a bit more about the particular acquisition target that we're looking at and how that factors into the company's plans for this year?
Well, the project's called Barrow Creek, and it is around the location called Barrow Creek in the Northern Territory. Importantly, it's surrounded by Core Lithium and other major lithium explorers. That part of the country has not been explored fully for lithium, as most of WA as well. And but it has very visible and real tin, tungsten, etc. mineralizations and occurrences, and even mines. So we believe it's a very good place to be in. Within the last few months, Core Lithium and Australasian Gold and so on, companies have released, percent plus lithium results from rock samples. So we know there's lithium in the area, and therefore getting involved in that or in that physical space and geographical space is a good location for us.
Excellent. A bit more on the macro note, Johan, do you think that the rise in battery metals and the demand for electrification and decarbonization is changing the way the small cap explorer is operating, in particular on the SX?
Yes. The value that's added by way of commodity price to any kilogram of whatever commodities you're exploring for means that there is more potential in finding that commodity, and therefore the risk is mitigated because there is a greater potential if you find something. So the exploration companies, I believe, would be more keen to spend more money than they would have been at low commodity prices. At the same time, historic deposits, which did not make the economic grade and were therefore not advanced, they would probably now be very seriously considered by explorers and miners alike, which will be beneficial to everybody because there's more demand, and if the demand is being met, the market grows because there's more of it around. So I think yes, it'll have a positive influence on the exploration market as a whole, and the wave is probably just going to get bigger, and we have to get better surfboards so we can ride it really well.
Very nicely put there, Johan. Rising tide will definitely rise all boats. Thank you for that. So to wrap it up, I guess some of the key takeaways that we're seeing today are the rapid decarbonization has obviously led to initiatives like 3D printing coming up. We've seen that supply chain crises and crises with testings in labs and other initiatives as well across the entire supply chain have led to companies like OXT listing on the boards and providing innovative solutions there. And of course, the rise in demand for battery metals such as nickel, lithium, graphite, as well as other metals as well, is really pushing the envelope for the small cap explorer. I guess from a peak asset management perspective, for us, it's really about looking beyond the blue sky and also at core value propositions that businesses bring to the table. As we've seen in the last few weeks, increasing volatility, especially coming in light of the US Federal Reserve, as well as market corrections, is prompting investors across the board to look at companies that are fundamentally pushing their boundaries and innovating. It's no doubt that the mining and exploration space is having what some might say a bit of a renaissance as we get into our 2030 and thereafter our 2050 targets. So thank you everyone for joining us. A big thank you to our panelists for giving us insightful presentations on the companies. If you have any questions, please feel free to drop them in the comments section or write into us directly, and we'd be happy to get back to you. This is Ali Ukani from Peak Asset Management signing off. Thank you very much.